Michael, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, the earnings fallout as Tesla, IBM, other stocks are on the move today. Following those reports, the investment committee, as always, on the case and making some notable new moves. We will document all of them for you. Joining me for the hour today, Josh Brown, Stephanie Link, Malcolm Etheridge, and Bryn Talkington. Let's go to the markets. We do have green across the board. This is a resilient market. How about this stat? The S&P yesterday posting its 121st straight close above its 50-day moving average. It is the longest such streak since it went 130 days, ending in March of 2011. We're going to get to the markets. We're going to get to all those names that are moving and a lot of moves, starting with a new buy alert. That's what I'm calling it because Josh Brown has added a new stock. And it is Zoom. You've talked about this before. Maybe you've even owned it in the past.
Oh, yeah.
But why now?
Me and Zoom go way back.
Yeah, why are you
I promised myself,
this romance?
I promised myself I would never do this again. So, of course, I did it. Here's the story of Zoom as I understand it and as I believe things to actually be. This is a company that we use at our firm, Ritholtz Wealth. There's an SEC regulation where financial advisors and other staff are not allowed to use their personal cell phones to call clients or to send text messages with clients. So everyone has to have their own phone number. And this sounds obvious, but during the pandemic, a lot of Wall Street firms got in big trouble for using their personal communication. Now, you can understand why. They were all sitting at home and nobody really had a plan. Zoom's got an enterprise business where they give you phone numbers that you can use. It's an app. All of our employees use it. So that's what got me curious. I wonder how successful this product is because that's our telephony provider. And they just announced that they now have 10 million users of Zoom Phone. The reason why this matters is because the problem with the stock for the last 4 years since the pandemic is that everyone looks at video like it's this commodity thing, like, oh, big deal, Microsoft Teams, Google Meet, it's all the same. The truth is it's not all the same. When an enterprise adopts Microsoft Teams, the salespeople flip out because all of the customers they want to call on prefer Zoom calls. Zoom is easier for everyone. So they sort of have an edge in a business that people think is commoditized. Okay, put that aside. If they can build out this enterprise business, of which telephony is only part of it, that's a really big deal. We have now adopted another product that they use called the Zoom Revenue Accelerator. That's AI, note-taking AI, which of course other firms have, but it's becoming so good and so important to my organization that I can't imagine that's not the case for all of their other enterprise customers who are currently using it. I think there's going to be an inflection point where finally they're able to show some growth away from just the video calling. It could be this coming quarter. They're going to report on November 24th. Could be next quarter. Not 100% sure. But the great thing about Zoom is because there's no growth here, and it's just been kind of flatlining mid-single-digit growth, the earnings multiple is 18 times. I'm getting a discount, obviously, to the tech sector, but to the overall S&P, with the potential that they will figure out a growth strategy and it'll finally click. The company's got $8 billion in cash on the balance sheet. They can make acquisitions. They can continue to buy back stock. They can do whatever they want with it. And I think that the risk here is minimal compared to the potential upside if and when they actually hit it.
Why haven't you seen the growth then? If they have this
they can't
amazing,
grow.
Well, why?
Because
and why are you going to pay 18 times for no growth?
I'll explain it to you. Because if and when the growth shows up, the stock will get a re-rating. Morgan Stanley just initiated coverage this week, and that was actually their argument. Basically, you're not paying a premium for anything here. You're paying a low multiple relative to other communications and technology stocks. But at a certain point, all of these other enterprise businesses that they've gotten into, if they can start showing actual growth, all of a sudden, this is a stock that people have to think about differently. I wouldn't be shocked if they finally post a growthy quarter or a growthier outlook. This could be $100 in the blink of an eye. Nobody owns it. Nobody owns it. The last thing I want to say here on the buyback or on the flexibility of having $8 billion in cash, one of the problems with this stock, they did all this hiring in the post-pandemic, like every other technology company, and they did something that was really generous for employees, but it screwed up the stock for 2 years. In other words, if they hired an engineer, they said, we're going to pay you $500,000. $200,000 of that is going to be in stock options. Then the stock falls 80%. So you either lose the employee or you top that employee up. They chose to top the employee up, give them another $200,000 worth of stock options. That stock option compensation problem has been an overhang on this stock. A couple of quarters ago, the CFO came out and said, you know what? Wall Street is telling us to knock it off. We have to stop diluting the shareholder base. We have to start focusing on shrinking the share count and being a little bit more shareholder friendly and a little bit less employee friendly. I think that's a very smart decision, and that's another thing that could end up showing up if and when the next time they're able to report it.
Okay, so we'll watch it, and if anything, it's a little bit of the flavor, if you will, about what we have coming up today. We have a number of moves, and then we have a debate on the other side of the moves to try and give you as much information as possible.
I think Stephanie wants to buy some.
To make your own
like that
decision.
chart.
I mean, you basically just
No. You're looking at a 10-year chart.
I know.
But
even
look at the 3-year chart. It's been at $80 for 3 years.
Steph.
This is just not
Well,
your
the
kind
bet.
of
You're right.
I think the bet is that it's not going to be at $80 for the next 3 years.
Unless they change their name to Zoom.ai, I'm still not. I'm still not.
The Revenue Accelerator is the AI product. We're using it. It works beautifully. My advisors are hooked on it.
What does Sam Altman think about it? That will change my perspective completely.
All right, so we'll continue to take a look at that. Maybe for a minute, or maybe longer than a minute. It was a retail-y kind of name around the pandemic for obvious reasons. I bring that up because if you look at the market overall, retail continues to play a considerable role in where we are, and I'm not talking about the meme nonsense around some of the names that have gone crazy of late. How about this from Goldman Sachs? Yesterday, 25.2 billion shares traded across all U.S. equity exchanges, good for the 5th most active trading session of the entire year. The average year to date is 17.2. Again, we're at 25.2. Their internal data shows the retail community accounted for greater than 16% of S&P 500 members' total volume yesterday, which was at a 5+ year high. What do I take from that, Malcolm? It's that retail's engaged. Retail hasn't given up the ship. Retail still believes in this market because they are perhaps tuning out the noise, and they're focusing on the economy, they're focusing on earnings, and they're focusing on don't fight the Fed. And they've been proven correct to do just that.
Yes, and I think retail has been taking those winnings from April 9th lows all the way through the summer and trying to find a place to redeploy that capital that made some sense. And so a lot of those dollars have piled into financials. That's done well. A lot of those dollars have piled into energy. That's done well. And they're really looking for where are the places that are going to be touched by the AI story, separate and apart from the hyperscalers. And so we've seen those dollars go in those directions. Quantum, you could make an argument that that's part of the momentum stocks, and those have become some of the more bubblicious names. But other than that, I think retail has gotten this one right so far.
By the way, Bryn, it's from the amateurs, so to speak, to the pros. The Barron's latest money manager survey, 47% anticipate higher stock prices over the next 12 months. Why do you say, well, it's under 50%? But it was just 28% in the spring. 57% believe that stocks are overvalued. That's interesting because it feels to me like it plays right into what we've heard from some of the brightest and most successful money managers of all time. It's like Paul Tudor Jones. Does he love the valuation of the market? No. Does he think it's going up? Yeah. Does he think you'd be foolish to miss out? Yeah. David Tepper came on the network and said, I don't love the valuation, but I'm not getting in front of don't fight the Fed and all that's happening with the stock market likely to go higher from here. What do you make of that?
The market goes up 75% of the time, and in the 75% of the time, the average return is about 26 or 27%. The 25% the market goes down, the average negative return is around 15%. And so I think if you're waiting for that negative year and you're positioning around that, that's just a great way to grow poor safely, and you feel smart for that minute of time or that 6 or 7 month or even year of time when the markets are going lower. But that's just proven to be a fool's errand. And so I just think we're in this moment of time. We've got a bunch of meme stocks. That meme ETF is back. But we also have real stocks and real companies, as Malcolm was saying, I think across sectors, financials, utilities, industrials, of course, tech, that have really good earnings. And so to me, what I look at, although valuations are clearly at highs going back decades, earnings also continue to not only grow but accelerate. And so I think while we have that reality, investors are going to continue to invest. And we'll obviously have the speculative meme names that continue to garner a lot of headlines, but we'll also have really good high-quality companies, as we're already seeing in the earnings report that we've gotten so far.
Speaking of, let's look at IBM, for example, which did have a good earnings report, beat on the top and the bottom line. The stock was lower earlier. It plays into the theme that I mentioned at the top of our program, moves that the committee is making today around some of the stocks that are in the news. The stock is off, as you see. It's coming off the map, though, from where it traded after the earnings. Is it, Steph, the fact that as you talked to us on Closing Bell yesterday, going into the print, the software line was going to be the most important one? It was a little lackluster last quarter. The stock sold down after earnings. It only came out in line with street estimates yesterday. Is that why the stock did what it did?
Yes, short term, right? But the numbers, they beat earnings, revenues, they raised margins, they raised free cash flow. That was the second piece, Scott, that I was looking for in terms of free cash flow guidance at $14 billion. That was at actually the high end. So yeah, so the software piece was disappointing, but it still grew 11%. It still accelerated 5% sequentially versus 3% sequentially the prior quarter. So to me, I'm not getting all, hybrid cloud at 14%. I think that's actually positive. Okay, it wasn't 16%, but I just think that this company is positioned so well. In addition, the infrastructure revenues grew 19%. Consulting actually grew 3.3%. That actually surprised me a lot. I think they're taking a lot of share from Accenture. And so I think the fundamentals are sound. I mean, it was down as much as, 6%
Yeah, it was
today?
down a lot. It was down a bunch.
I mean, that to me is
25 times forward. I'll throw the same question you had for me with Zoom back to you.
different company.
Well, we agree.
Different company.
What's the
than
historical?
What it was
What's the historical on IBM?
18 times.
16? Okay.
18.
And what's it at now?
It's at 25.
Does it deserve
forward?
Wait a
Does that
second.
deserve that much of a
Yes, it
premium?
does, because guess what? 74% of the company's revenue are software and services. If you go back in history, it wasn't even 20%. They didn't even have any software. There's a mainframe company, right? So now it still is a mainframe company, but it's much smaller. Consulting is doing well, also, by the way, aided by AI. And software, I mean, look, hybrid cloud 14%, automation up 22%, Red Hat backlog up 20%. That to me tells me hybrid cloud is expected to accelerate in the second half.
Okay, so we buried the lead a little bit. The fact is, both of you bought more of the stock.
Yes.
You look at the decline and you say, I don't believe it. I buy it. Tell me more, and then I want to hear from you too.
100%, because it goes back to actually just the market as a whole. It's not that difficult to buy stocks because earnings are actually coming in much better than expected. Earnings are running at 13% growth. Revenues are running about 18% growth. You buy stocks where numbers are going higher. IBM numbers are definitely going higher. They raised guidance. So I think you own the banks. Numbers went higher. You own some of the consumer stocks. Numbers at American Express, Royal Caribbean Cruise.
Oh, but you want to buy these things, though. I mean, you got to look at the valuation in some respects, right? Don't you? I mean, Josh's question has validity to it, just like yours probably did with Zoom. I mean, there's already a lot of that has to be in the stock if it's 25 times forward. Where is it going to go? Where's it going to trade at?
The whole transition of this company, I don't think is appreciated at all. There's still
How?
only.
Look at what the stock has done.
So yesterday we talked about it. There are only 8 buys on this stock. There are 14 holds and sells on this stock. People don't believe in the software story. They don't believe in the management.
Look at the chart.
I think the numbers continue to go higher as software and services become even more of a part of the story. And oh, by the way, more recurring revenue, more predictable revenue.
Malcolm?
I agree wholeheartedly with everything Stephanie just said. This is a legacy mainframe company that's turning itself into a software company. It puts up margins, gross margins that look very similar to a software company, 60% almost. Yet the market is responding to a beat and a raise with a yawn. Not even a yawn, a sell-off. The shares sold off pre-market all the way down to 8%. That is absurd to me. And so, to your point, I stepped in and bought more shares this morning.
I thought
it was a great opportunity.
I like the stock. First of all, I like it technically. Look, I like this chart is exactly what I like to see as a reaction. Look how quickly they came in to buy that up.
Yep.
And I guess the part I would disagree with is that they're not getting credit for having transformed already into a software business. This is a stock that's up 150% in the 3 years since ChatGPT came along. I think everyone understands how important IBM is to AI.
$9.5 billion of bookings in AI specifically in 3 years for a company that, I mean, this is old tech we're talking about.
And then
Not anymore.
14 billion in
right.
free cash flow. 14 billion. That was much better than people thought. At the high end of what was whispered.
Yeah. I think the stock's going to work, so I like it.
Okay, so the other one that is newsy comes by way of the AI power story, which we talk about a lot because there's a lot of ownership on the desk. You all probably own some of those stocks too. They had a pretty good pullback yesterday of what's perceived to be maybe some froth in the market because the stocks are up an awful lot. Vertiv is a good example. Vertiv had earnings too, which were really good. The CEO was on with Jim last night on Mad Money. It's a Stephanie Link name. Look at the stock today. It's rebounding up 6%. You bought more of it today?
I did, because the fundamentals are very, very strong, and I just can't understand why the stock would be down 6-7% at one point yesterday. It was the momentum trade, right? The whole momentum trade totally rolled over. It was risk off. These guys got caught up in it, but they beat and raised. Total revenues grew 28%. Operating margins beat by 200 basis points. The orders is the thing that kind of was staggering to me, up 60%.
How much was it down?
It was down at one point at 6% yesterday.
I thought you said 6-7. I just wanted to get that.
Yeah, 6-7.
She said it.
Focus on
Scott, she said it.
Go focus on your Zoom and that chart. Go ahead.
Everybody got that? I'm assuming.
Bryn liked it.
Bryn, it takes me. We'll do Tesla here because the moral of the story on the show today is like a stock a lot, been in it for a while, see a pullback, and pounce on it while you have the chance. Tesla then brings me to you. Stock's down. It's coming off of its worst levels, of course. So what's your take on the quarter? And why don't I have anything on here that says Bryn buys Tesla? I don't see anything.
Well,
buys more.
I already own Tesla, and so
buys more.
So I talked about
buys
this
more.
yesterday.
I misspoke for a moment. Buys more.
So I've been an investor for a long time. Let's talk about the call. Well, first of all, that chart you have up looks just like one of I think it was IBM. It sold off this morning. I think it got to 415, and look, it's already almost flat for the day. The numbers are the numbers. We all know that the earnings are down because less car sales. What was interesting, though, I thought the call was very strong. They laid out a very good roadmap for investors for, I say, check marks and catalyst. So first of all, I have a Tesla. I've had 2 Teslas. I understand where they are from a user in terms of full self-driving. Right now, they're supervised, meaning that if you look down or if you sneeze, it yells at you and says, we're going to turn it off. I believe they're at that last mile and that the technology's gotten so good. And he talked about that they feel that technically, he said, by the end of the year, which probably means the middle of next year, technically they will be able to go unsupervised. So that would be a really big deal. They need regulatory approval. China, supervised is not even allowed in China, which they talked about that. I think as it relates to Optimus and what Dan and I were talking about, Ives, yesterday about the new value creation of the company, the question was asked, like, how quickly is Optimus, the robot, going to be rolled out? And Elon was really clear. He said, I feel really comfortable 5 years from now, we could be doing 1 million robots a year, but I feel less comfortable over the next 1 or 2 years because we all know the realities and the difficulty in manufacturing something that hasn't been manufactured before. And so I think what it boils down to, you will continue to have a tug of war where this stock trades in its own ecosystem. It doesn't trade with the S&P. And I still think that 460, 470 is going to be a ceiling for the rest of the year. And then I think, that 400, 390 is a great spot. So I wanted to give a trade idea that I'm looking at. I said yesterday, I would buy more of the stock if I sold a call. You could buy the stock here at 434, sell the January 470s, and get $30. And so if it doesn't get called away, your cost basis comes down to 404. If it does, you've had a nice trade in 1 quarter. So that to me is the way I would be and I will be playing the stock, is buying more but only selling calls, because I just don't think there's a catalyst to get this stock over that 460, 470.
All right, it still works. I mean, you still played into the theme. You had something going on, and it's good to get your perspective too, which brings me to another stock that fell after earnings. We could see what it's doing today. Netflix, sort of kicked off the high interest out of the NASDAQ earnings reports. The stock is still trying to recover a bit from the sell-off. You took a look at this and decided you wanted to buy more.
Yeah, and it was an average up, so I owned it for a long time. The stock has had an incredible year, gave back a big chunk of the gain on the heels of the earnings. It was a very strange earnings reaction, in my opinion, so I wanted to fade that. They had a long-standing dispute with the Brazilian tax authorities. I won't rehash the whole thing. What it boils down to is they paid a couple of years' worth of whatever that dispute was, 600 some odd million, and absent having made that payment, which was not in their guidance, they would have actually beaten the number. People just didn't seem to care. They used it as an excuse to sell. Now the stock is testing its 200-day moving average for the first time since April, and I believe we have that chart just so I can illustrate this point. I do think, here we go. I do think the buyers will show up here as they have in the past. I do think if it does break below, it'll be very temporary. I think the 200-day moving average has worked like a charm in terms of a good opportunity to accumulate shares in Netflix the whole way up. And I just want to reiterate how good the fundamentals are here. 25% net margins. They actually raised free cash flow guidance to $9 billion for this year, up from a range of $8 to $8.5 billion. More importantly, they still have $10 billion left on their buyback authorization, which means as things settle out, they should be out there in the market sopping up some of that supply. They told us a significant increase in operating cash flow would come. And I think when you come up with, like, what are the most important companies in the market, in the world, in terms of being a platform for consumers, Netflix has over 300 million customers. They're in almost every country. This is probably one of the 5 most important technology platforms in existence. And next year, they take the fight to YouTube. They're bringing on podcasts like Bill Simmons and The Ringer. They'll probably do more of those. And I do think that this is a stock that should have a great 2026. So I wanted to make sure I own some more of it before we get there.
Hey, let's do Josh Brown's best stocks in the market. The spotlight shining brightly today on what name?
Interactive Brokers. We wrote the stock up over the summer, and we talked about it here on the show. And it was a breakout in progress. It went up like 8 or 9 points from there. It's pulled back a little bit, and I think it's setting up for another entry. Look, I'll make this really, really simple. They're in every market that Robinhood's in. Robinhood is growing faster and it's bigger. It gets a lot more attention. This stock is selling at a 50% discount relative to the multiple that's on Robinhood right now. So you could say, well, maybe that means Robinhood's really overvalued, or you could say maybe this is really undervalued, or maybe the truth is somewhere in the middle. I'm going to tell you that I think ultimately this is a company that's going to get acquired. I wouldn't say that I know anything or it's going to happen imminently, but the founder, who's a brilliant man, Thomas Petterfy, is 81 years old. He owns 67% of the stock, and at a certain point, you look at all these companies that are worried about this convergence of prediction markets and sports betting and retail brokerage and options trading. And at some point, one of these crypto players that needs to be in stocks is just going to look at this as a shortcut. So I think there should be more of a premium baked into the share price, given that somebody's going to want this asset. Even if they don't take this asset, I think it makes a new high on its own fundamentals. They've been adding new accounts at a ridiculous rate. doing very well in this bull market for all things options, crypto, and stocks. I think that continues. I think the stock breaks into the 70s, makes a new high. So I wanted to shout this out because it's on the best stocks in the markets list. It really hasn't made the big move yet, in my opinion, and I think it's pent up and ready to go.
Okay. Bryn, your final trade is what?
Salesforce. Chart starting to rebuild itself. Good meeting, good earnings. Good number after the Dreamforce meeting. When their earnings come out December 2nd,
All right.
they're looking to report 19% growth.
Thank you, Malcolm.
IBM, 9% year-over-year growth. What else do you need?
Steph?
Las Vegas Sands, another beat and raise.
Josh?
Netflix looks like it wants to go green on the day. Where's the roof?
All right, see you in 2 hours.
Hey everybody, welcome to Blue Cloud Trading. My name is George. It's Thursday, October 23rd. Just saw some clips from the halftime report earlier today. That was Josh Brown and other guests sharing their stock picks. And in this video, we're going to cover a number of those stocks that they talked about. We're going to look at the following stocks. There's about 7 of them. I've already previewed all these stocks here, so I can tell you just one of them, VRT, is looking bullish on both the weekly time frame and daily time frame when we initiate the Ichimoku indicator, and I'm going to go into that a little bit in a few moments. We'll also cover, we'll cover VRT along with those other stocks like Zoom, IBM, Interactive Brokers. Not all of the stocks discussed, but we will also cover the Qs, the Russell 2000, the Euro stocks, the S&P 500, Dow Jones, the VIX, which dropped almost 7% today. We'll look at some stocks like Apple, Tesla, and Meta. We will look at the sectors. Let's go look at the strongest ones and the weakest. We're going to cover about 8 stocks from our members that they've requested. So I'll be running over those in a few. So let's get started first by just looking at the market and see what happened today. You can see that the Dow was actually kind of like, it was creating this like almost symmetrical type pattern here early in the day, and then around 1 p.m. it popped, right? So the Dow Jones was up 0.31%. The Nasdaq actually reacted differently. It was just started moving upwards and then kind of started going sideways around 2 p.m. to 4 p.m. It was up 0.89%. It was up quite a bit. S&P 500 also just sort of creating that little pattern there, almost like an ascending type triangle right there, and that popped, and it was up 0.58%. And the Russell 2000, it was building this actually that looks more like an ascending triangle as well right there. That was popped up 1.27%. It was up the most actually today. And let's look at the heat map. That's going to show us the individual stocks in the S&P 500. How did they perform? You can see the majority of the semiconductors were all in the green here. Like Nvidia was up 1%, Broadcom up 1.17, Tesla was up today 2.28, Amazon was up 1.44, Oracle up 2.72, Palantir was up. A lot of the specialty industrial stocks did well. You can see all the green right there, and the industrials as a sector was pretty good. Energy stocks did well, the majority of them. Financials too. So it was a pretty good day overall as far as the markets. Let's look at the sectors and see which ones were strongest. And you can see that energy is at the top. Let me zoom in for a moment. There we are. With energy up 1.52%. Okay, then you had industrials up 1.44, technology, consumer cyclical, basic materials, they all did well. The rest of the sectors, not so much. I mean, consumer defensive, once again, was down 0.31%. Real estate was down 0.17%. There's the 1 week performance. Energy, the clear leader here, up looks like 3.9%. Okay, let's now get into, fix that for a moment. There we go. Let's get back to the stocks, and we're going to start off with the index ETFs like the Qs first, and then we'll get into the rest of those stocks that I just mentioned. And here's the QQQ ETF, up 0.84%. How does it look on the technicals? Pretty good overall. You can see that we are still in this on the weekly chart. We're looking at a weekly chart right here. We're still in a steady uptrend. We're holding up above the important moving averages of the Ichimoku indicator. Very briefly, the green line is the 9 period. It takes the highs and lows, divides that by 2. It's the midpoint of each of the last 9 candles that you see here. All right, and it plots it right there. So as long as price remains above this moving average, it's really important. It has to actually remain above all the moving averages. Here's the Kijunsen, or baseline. So they call this the Tenkan or conversion line. This is the Kijinsen or baseline. This one's the midpoint of the last 26 periods. So it's a little slower. You've got the Chiku span or lagging line, which is the white line that you see right there. That's actually today's closing price. Okay, if you look at the, it's a line form. So if we look at today's closing price, which was right there at 610.58, you project that 26 periods into the past, that's where you'll find it. And then, of course, if that white line is above the candle 26 periods ago, it's actually very bullish. If it's under, like it was over here, like it was over here, that's bearish territory. Okay, so that's all good. We've got the Senko span A, which is the midpoint of the two moving averages. So if you take the green line here in the mid and the red line, and you take the midpoint, project that 26 periods into the future, that's where you'll find that line. We want, that's called the Senko span A. We want that to be above the Senko span B, which is derived by taking the midpoint of the last 52 periods. And then instead of projecting it under the candle, it projects it 26 periods into the future. Very unique indicator. It's been around for decades, originated in Japan, and it's still used in many financial institutions. And the idea behind Ichimoku, what it stands for in English, is at a glance. We're looking to see what's happening with any stock or ETF or currency. It doesn't really matter what you're trading. And the key thing is to look to see what it looks like on multiple time frames. Personally, I like to focus mostly on the weekly chart and the daily. All right, so during the week, I really cover the daily the most, and so that's what you're going to see me covering mostly here. And then on the weekends, I do the weekly charts as well. But yeah, so on the with the QQQ ETF up 0.84%, you can see it also looking very strong here. All the elements of the indicator are still very strong. Okay, that's very important. Russell 2000 also looking very bullish. The only thing with this one here is that the price is currently under the green line, the 9 period. So just slightly, but I think it's more than likely to continue moving up based on the type of pattern that I'm seeing right here. I do like that. You got FEZ, and by the way, the Russell 2000 on the weekly chart, still strong uptrend overall. On the daily chart yesterday, we had this little pullback here after this reversal candle, and it actually closed under the Kijinsen. You really never know how it's going to play out. You have to focus and just watch it. You can look at it on multiple time frames. Okay, like the 30-minute is a good place, and you can get more information about what's happening throughout the day by looking at it on a shorter time frame, like the 30-minute, the 5-minute, or 1 minute. But Russell 2000 looking good currently, except for the fact, like I said, that it's still under the Tenkan. Euro stocks bouncing off the Tenkan yesterday. That's good. Up 0.69%. Here's the weekly chart as well. For the last 4 weeks, we've been kind of stuck in this range. All right, so there's not a lot of movement going on here. There's a little bit of hesitation in the market, so I think people are skeptical about going all in at this point. As long as the government shutdown is in effect, I think that's an important thing that needs to be resolved. And I think that once that is resolved, then we could see a rally in the market. So we'll see. S&P 500. Let's take a look at that. Here it is on the weekly chart. Very strong uptrend. Okay. Daily chart also looking pretty good. The only thing with this S&P 500, the SPY, is again it's it's been consolidating, meaning it's been stuck in a range for so long here, multiple weeks now. Okay, if you think about it, we're talking about since mid-September. Okay, we've been in this range here. So yeah, I'm not ultra bullish here. It's holding up. That's all I can tell you is that it seems to be holding up, and neither the buyers or sellers are really in control here. Okay, but the established uptrend is still in effect on the daily chart and of course on the weekly. How about the Dow Jones? Also, just sideways here. Nothing major happening. Okay, you can see that as well. What about up 0.32% on the daily chart? The Tenkan and Kijinsen are around the same level on the weekly chart. It's still looking very good. Here's the VIX. Now the VIX represents volatility in the markets. We want to see that declining after that spike that we had, back on October 10th. It started, it reached a high point here of 28.96 on October 17th, and it's been declining ever since, re-entering the cloud here. That's a good sign that fear and volatility is coming out of the market. That's conducive to a more bullish market. So we'll see if that continues to drop. All right, now we're going to cover the stocks, some of the stocks that were talked about on the show on CNBC on the halftime report. VRT was one of the stocks. It's in the technology sector and electronic components. It's actually the only stock that fit all the criteria necessary from the Ichimoku indicator, okay, to say, okay, this is a strong stock that looks good, fundamentally it looks really good. Profit margins are good. The EBITDA is positive. Operating cash flows of $1.6 billion. The price of sales is a little bit up there, 5.94, but this is a technology sector, so you can expect price of sales to be a little bit higher than normal. And the beta is good, 1.03. I mean, overall, I like this stock. It looks good on the weekly chart and on the daily. Yesterday, on Tuesday, we had price closing underneath, but then see that long wick towards the end of the day. Price moved up. I didn't do a video yesterday, so we didn't cover the stocks yesterday, but what that represents essentially is buying that took place towards the end of the day. Now, if we look at this on a 5-minute, we'll be able to see that. All I need to do is go back in time a little bit here. Let's go back to October 22nd. Here we were yesterday. You can see the drop that happened, and it was really around this time here, around 11:30 or so, 11:25 a.m., that things started to pick up. And let me zoom in a little bit more into that. You can see that it just kept on moving up throughout the day, the rest of the day, right? So by 4 p.m., we had reached this point. So we moved up approximately, 5.5% in a very short period of time, in 4.5 hours. That's a big move. And then today we saw the gap up in the morning. Right there, it gapped above the 200-day moving average that was on the 5-minute chart. Continued its way up, another 6.77%. It's a big move if you think about it over that short period of time. And right now we're still on the 5-minute, still looking pretty bullish. We have a bullish engulfing pattern on the 5-minute towards the end of the day with price closing above the moving averages and above the cloud. So that's good. Okay, let's switch it back to the daily chart and let's continue with the rest of these. The rest of these do not get a blue flag, which means that there's something, at least one thing that's off on either the weekly or daily time frame as far as the Ichimoku indicator is concerned. So let's look at that. Here's the weekly chart for CRM. Now this one does still look pretty bullish. We've got price above the cloud, right, which is important. We've got the Senko Span A here above the Senko Span B. That's also good. We've got the Chiku Span. The white line is above price. That's good. And price is above the cloud, so and moving averages. So this is all good stuff. The only thing is the 200-day is declining here on the daily, but it was really the weekly chart that the reason why it doesn't get a blue flag is, as you can see here, we're still under the cloud on the weekly. What I typically, the types of stocks that I recommend and the ones that pop up on my daily scanner are only stocks that look strong on both the weekly and daily time frame. That's something I share with legend level members every day. If there are stocks that are showing basically a new buy signal, it's a proprietary scanner that I've created in this platform, TC2000, and I share that daily with legend level members. To get access to that, if you're interested in it, you would want to just come to my site here, Blue Cloud Trading, and click on the join button. Okay, and then become a Blue Cloud Legend. There's 3 levels here. Blue Cloud Legend level membership. That's how you'll get access to those daily trades. All right. You'll also get the members exclusive member only video that I share each weekend, where I go over my entire portfolio. It's usually about an hour long video, so that's pretty cool. So consider becoming a member. We have over 155 members right now. All right. So we're doing pretty good on this channel. It's got a lot of interest, and I think there's a lot of value in this channel. I think people are learning some stuff, and they're getting a different perspective on the markets, and that's important, right? To be open-minded and to start, taking a look at the technicals and utilizing them. They can be very useful before entering a position. It can help you also manage your trade. Once you're in that trade, you want to know exactly, okay, when is it time to really close the books and get out of that trade. That's really important. And so hopefully that's one of the things that some of the things that you'll learn in these videos, where I go in a little bit more in depth about my strategies. Okay. Anyway, so that's one of the things you can do. And by the way, if you haven't subscribed yet, we're almost at 24,000 subscribers. Please hit the subscribe button and hit the notification bell. This part is free, doesn't cost anything. And that way, when I do post another video, it'll be easy for you to find it. Okay. All right. So let's look at CRM. So again, CRM is under the cloud. So when you see a stock that's under the cloud on the weekly, I typically will skip it. I won't even consider buying a stock in that scenario. Here's Interactive Brokers. Now, Interactive Brokers on the weekly chart is still bullish. You can see that price here is above the Tenkan-sen. It's above the Kijun-sen, the 9 and the 26 period. It's above the cloud. The Chikou span is above price. Everything looks good here. Senkou span A is above Senkou span B. But if you switch it over to the daily chart, it's not looking particularly good here. One of the things that happened just today actually was a negative crossover. I don't know if you can see that right there. So that's not good. That's when the green line crosses under the red line. You might not, let me zoom in so you can see it better. Okay, do you see that right there? So the other thing, if you look down below, I also like to utilize the directional movement index. And if the red line is above the green line, the negative DI9, that's also bearish territory. And you don't want to necessarily be adding positions in a scenario like that. You can also use traditional technical analysis. Just look at this. It's in the downward channel right now. Okay, it's impossible to know exactly when this downward channel is going to end. Actually, that's not true. I take that back. You will know when it ends, when price actually breaks above that trend line, gets above the moving averages once again. Okay, but right now we don't know when that will take place. So we have to wait for it, right? We got to wait for it, and it's not there yet. So I'd hold off on Interactive Brokers. What about IBM? Well, let's look at the weekly chart. Weekly chart looks bullish on IBM. Price is above the moving averages and cloud. Looks all good. It does seem like it's almost kind of creating a little bit of a double top up here, though. Notice how price stalled right at that prior high there and dropped. So that's a little bit concerning. But we did get a bullish candle. They call that a hammer after the little pullback. So that's bullish. Price is, let's look at the daily chart. Here we are. And it says down, yeah, we're down 0.87%. Even though this is a bullish candle, here's the closing price yesterday. All right, you can see the closing price yesterday was 287.51, and then today we are at 285. So it dropped. Interesting though, we went from this price yesterday, closing price, all the way down to the cloud. Okay, it pierced the cloud briefly and then bounced right off of it, which happens many, many, many times. As I've mentioned before, this is really a good support level, especially when the cloud is flat, like you see right here. Expect that. So now we've got the negative crossover with the green line under the red line here. That's why I would not be adding position here based on that alone. Okay, I'd want to wait. All right, LVS. Las Vegas Sands, this one on the future cloud is bearish. So what that means is the Senkou span A, the light colored blue line, is still under the Senkou span B. It's moving straight up. It should cross tomorrow, I think. And if you look at the directional movement index, we're already getting a buy signal over here with the green line crossing above the red line and the big volume bar. So Las Vegas Sands is looking good. It also broke through, the price actually broke above the Ichimoku cloud. In fact, it gapped above it. It went from right there, it just gapped right above it, opened right above, and then continued to move up. Where's it going to most likely going to find some resistance? Well, this blue line is a weekly chart, a weekly candle. It goes back to that date right there. But I think we'll have to readjust this because we do have this high right here. So I'm going to go ahead and move this right there, and let's find out what that is. That's 58.05. So let's go ahead. That's where it's going to find resistance next. Let's put that price in there. And we are currently at 56.89. So, yeah, just expect that. Here's the daily chart. Okay, MTUM, Momentum ETF, still in the box. Nothing major happening, even though it was up 0.81, bouncing off the bottom of the box here. So that's good. I mean, it's good, but it's where prices under the moving averages here. That's not. So I'd hold off on MTUM as an ETF. Hence, no blue flag. Zoom. Josh Brown likes Zoom once again. Here's the weekly chart. Let's look at the weekly. Now, I actually love the weekly chart here with Zoom. It's showing some strength. So if you look very, very closely, let me see if I can zoom in a little bit. Yeah, it's kind of hard to zoom in on. Okay, there we go. Yeah, so you can see, move that up a little bit. There we go. Okay. Notice how the synchronous band A on the weekly chart just crossed above the synchronous band B. Okay, that's really important. That's the first signal where the cloud is turned bullish here. And then if we zoom in a little bit further, you'll notice that the price actually closed above the Tenkan on the, well, it didn't close yet, right? Remember, tomorrow we'll have, this candle will be completely formed. It's dynamic still. We won't know what it looks like until the end of the day tomorrow. So that's one thing I'd be waiting for. Now, the other thing that I like about this chart is the fact that price actually broke above that 200-day moving average. Notice how it was being held under right there for these last 3 days, right? These 3 red candles. And here it popped. So that's good. The directional movement index. We got the green line above the red line. The ADX is still moving sideways here, or slightly down. That's the momentum. So that's the weekly chart. Now, I would probably want to hold off at least until tomorrow afternoon before considering adding a position in this stock, because I'd want to see what this looks like at the end of the day. But what does it look like on the daily chart? Are we there yet? The answer is no. In fact, I would hold off a little bit longer than a day, because if you look closely, we've got a few negative things that have happened here. We've got a negative crossover. The green line is under, so that's the faster moving average is under the slower one. We've got the Chiku span under price. Remember, that's bearish. We don't want that. The cloud itself is still bullish, so that we don't have all of the elements telling us this is a strong uptrend. Obviously, we did break this little trend line. That trend line right there, so that's good. But I don't know if I want. I personally wouldn't be adding positions quite yet. Not until everything starts to go basically align, and we're not in that stage yet with Zoom. But it looks like it's getting there. All right, so something to definitely keep on our radar. What about Apple? Apple is under the 260 level, okay? So under the $260.10 level, which is based on a weekly level, that little candle from December 27th, 2024. See it circled right there. That was the prior high, and we are still under it. In fact, we've kind of started forming this week a shooting star. That's not good for Apple. Guys, remember what I mentioned about? I've mentioned the shooting star before. If it happens at the top of a move, let me just show you what that looks like again with this candle pattern reference sheet. Here it is. Let me zoom in a little bit. It's a single candle pattern. It's bearish. After move up, long wick, small body. Typically, the red body is going to be a lot worse. In this case, it's a green body, right? We got a bullish type candle here, but it is a reversal candle nonetheless, so we have to respect it. And I'd wait to see what this looks like also tomorrow. I wouldn't be touching this personally, but look, from the perspective of price being above the moving averages, price being above the cloud, it does fit meet all that criteria, all right, on the weekly chart, which is why it got a blue flag here, and it does also meet that criteria here on the daily, right? We've got price above the moving averages, the cloud, and Chiku span is above price, but the fact that it's reaching this level here and stalling, I would still hold off nonetheless. All right, let's go to the next one, Tesla. And so with Tesla, it has been moving up on the weekly chart. You can see that it is currently though like still stuck in this little range for multiple weeks. I mean, 1, 2, 3, 4, 6 weeks where it's stuck in this range. It's just been going. It's been going sideways. Now, what's interesting is we created a lower high here from this prior high, and it's possible the price will move up a little bit more. Now, where is that next resistance level? Here it is on the yellow line. Okay, it's most likely going to be around 468.40, around that price level. So when it comes to that level, you want to watch to see how price reacts at the end of the week. I would actually focus more on the daily chart because you can see here on the daily chart we are just about 4.7% away from that level. Okay, and so if it moves up another 4.5% or so, and it could certainly do that. We've got a bullish engulfing pattern here. You can see that between these two candles. Let me show you that pattern as well here real quick. So all we need to do is go under the candle pattern reference sheet, under the bullish double candle patterns, and we'll find it right here. It's a small red candle followed by a much larger bullish green candle. That's what we have, okay? The problem with Tesla, we've got a faster moving average that's crossed under the slower one. The green line is under the red line. So that's not good. So therefore, it doesn't get a blue flag, okay? On the daily chart and on the weekly chart, we still look pretty good, okay? But, or bullish, but again, there's that resistance level. Plus the 488.54 level, which is a monthly resistance level. If I switch to monthly, that's the highest Tesla's ever been. That's the highest price it's ever reached, and we are still under that prior high from the month of December 2024. How about Meta? Here's Meta on the monthly, above the moving averages. Here it is on the weekly, under the Tankinson, so we don't have a buy signal here yet. Here it is in the daily chart, under the cloud, stalling for a third day under the Kijinsen and the cloud. So no good. I would not be adding a position based on this, okay? Remember, we have developed a lower high here from the prior one. So we're in a decline. We're in a downward channel with Meta, basically. There it is, okay? Even though it's slight, you can hardly, it's not like it's not like a 45-degree angle, but it is nonetheless, it's downward. It's in a downward slope, and so we're still under the cloud. It's not looking good, and the future cloud is also bearish. You see the single span A is under single span B. So all those mathematical equations around Ichimoku are very, very important because, yeah, even if you weren't looking at the technicals, you weren't looking at trend lines or anything like that, just utilizing this indicator, it's giving you all the information you need to see. At a glance, it's under the cloud, so you just skip it. Guys, there are so many other stocks that are looking very bullish right now, all right? And when price is under the cloud, you don't know exactly when it's going to basically break above, and therefore you just want to not even bother with it until it starts to show some strength like it did over here. It started moving up. Or, over here, and it started moving up. Or back over here, it started moving up. Okay, when it gets under the cloud, no good things happen. Look at 2022 over here. Let me switch it to a weekly chart so we can go back to 2022 so you can see what I'm talking about. And zoom out for a little bit. There we go. So you can see that in 2022, Meta had a big drop. The first signs always begin with price getting under the moving average, like it did right there. Okay, went sideways, dropped. Once it got under the cloud, it was in bearish territory, and it just continued to drop for almost a year. So from this point, if we were to measure from, let's see, that's September 24th of 2021, okay, all the way to this low right here, November 4th of 2022, it dropped. Are you ready? 74.85%. Yeah, we're talking about Meta. One of the Mag 7 stocks had dropped 74.85% in 1.1 years. That's crazy. All right, that's 58 bars, 58 weekly bars. But then guess what? It started to turn around, and it all started to turn around. The first sign is price gets above. There's always always one thing that has to happen first. Price has to get above the Tenkan-sen, the 9 period, then the Kijun-sen, break into the cloud, breaks above the cloud. Now all of a sudden, okay, you feel a little bit more confident that this decline is over. You can start thinking about adding, and it would have made sense because guess what? Since it broke above here, and we can measure, I don't know, let's say to this point right here where Tenkan-sen crossed under Kijun-sen, maybe like right around there, it moved up 121%. So that's what I'm talking about. Okay, let's go into the sectors real quick. I've already reviewed all of them. That's right, and I came up with these 6. Okay, I'm sorry, I take that back. It's not 6. It's 5. 5 out of 20. Okay, that are looking strong on both the weekly and daily. So let's look at XBI. Here it is in the weekly chart. It's above the moving averages, above the cloud. Everything looks bullish still. We do have a reversal candle that's forming, so be careful. Here's the daily chart showing a little bit of weakness here. We're pulled back, but it's still holding up above the Tenkan-sen, so it gets a blue flag. Industrials also looking pretty good. Yes, the Tenkan-sen is slightly under the Kijun-sen here, but we have a bullish harami, which I like. I like these patterns too. This right here. So I think that could potentially turn into something bullish. That's the 2 candle pattern. There, let's see if I can find it. Right there it is, right in front of us. Bullish harami. That's what it looks like. A large red candle followed by a small bullish candle, green, blue, whatever you want to call it. And if you're unfamiliar with understanding how candles work, guys, real quick, this is it. This is something that I would study. It's not that complicated when you're seeing those Japanese candlesticks. Here's the body of the candle. Okay, this is the opening price. Let's say that this was a daily chart that we were looking at. Here's 9:30 in the morning. Okay, throughout the day, maybe around 10 a.m., the price drops. It creates the wick. It comes down to that price level, the lowest level of the day. But then the buyers step in and they push the price back up. They keep pushing it throughout the day, all the way up to that level. That's the high of the day, all right, the top of the wick. And then what happens is they start, maybe the sellers towards the end of the day, they start selling it, price drops. 4 p.m. is where the price closes. That's the body. So the body of the candle is always the opening price and the closing price of that time frame. In this case, in a daily, it would be 9:30 a.m. Eastern time, 4 p.m. Eastern time if we're trading in the U.S. market, okay? The opposite occurs when it's a red candle. So the high of the day still applies with the top of the wick here, but here's the opening price and here's the closing price. The closing price, instead of being at the top, it's at the bottom, right? So you can see maybe it started at $10, the price was $10 here, and it drops down to like $8 or something like that by the end of the day. And over here it might have dropped all the way down to $7 before coming back to that $8 level. So that's really, it's that simple. And what that does is it gives us a lot of information, a lot more information that you would get than just looking at a bar chart or even like a line chart. Okay, so this gives us so much information. And by the way, when you're looking at a weekly chart, the way that it works is, okay, here's Monday. Okay, that's Monday, 9:30 a.m. And on a weekly chart, that's 4 p.m. on Friday. Does that make sense? And here we are on a bearish, saying the opposite, okay, the inverse. 9:30 in the morning, 4 p.m., 9:30 a.m. in the morning on Monday, 4 p.m. on Friday. All right. That's just a quick little lesson because there's a lot of people that come to this channel for the first time. They're very unfamiliar with candlesticks. They don't, I would say definitely it's some very valuable information that you can get from learning about Japanese candlesticks. Steve Nissen has a book out. You should look up Steve Nissen's books on Japanese candlesticks. Some of them they're really large books, like they look like encyclopedias. Anyway, let's continue. All right. So, industrials, I still like. Okay, XLK is the technology ETF. That one also looks pretty good here. It is, again, kind of stuck in this little consolidation. Has not taken out. It's been for the last few weeks, but we're bullish still. The negative DI is above the positive DI, but it seems to be going sideways here. Okay, just like price. What about XLV? That's healthcare. Up just 0.05% today, but that one you can see we took out this high barely. Did we get above that? Let me see. The high there was 146.13. No, we didn't take it out. So let me just go ahead and throw that on there. 146.13. Let me fix that. There we go. So we're stalling at that little prior high there from October 3rd. We need to get above that with XLV. Here's the weekly chart, looking good. This week it's finally breaking above the Ichimoku cloud. The single span A is just about to cross the single span B, and the positive DI is moving up, negative DI is moving down, and the ADX is moving up. This is all bullish for XLV. SMH also in a nice strong uptrend. Here it is in the weekly chart. Okay, we did get a reversal candle here. Again, we don't know if that's going to basically materialize into anything. It doesn't always. And here's a daily chart. We can see today it was up 1.83%. Again, even the semiconductors, I think, still stalling. So that's where we're at right now. There's a lot of indecision. Okay, now let's look at some of the other stocks, some other ETFs that we've got here that are not looking as bullish as they might have recently, like GDXJ, which is Junior Gold Miners ETF. That one has pulled back. It's under the moving averages. It did move up 1.13%, but stalled at the Kijun-sen and dropped. So this is what a 5-minute looks like on that. Okay, it moved all the way up to this point, and then it continued just going sideways after that. How about Oil K? This is the K1 Free Crude Oil Strategy ETF. That one popped up 1.21%, but look at it, creating a shooting star. That's a reversal candle. It's more likely to drop tomorrow. That's my impression based on where it stalled. We got a declining 200-day moving average. We're under the cloud. Chiku spin is still underpriced, even though it's moving up. It's still very bearish for oil. Copper Miners ETF COPX. That one has pulled back a little bit. It's in between the two moving averages, so I would just hold off until we see a breakout on that one. It's up 1.98% today. And on the weekly chart, it looks good still, but there's been signs of weakness these last 3 weeks. It all started with that shooting star on the weekly chart. Okay, so we've got these negative candles. These need to be cleared before we're 100% sure that this thing is going to continue. Okay, XLC on the weekly chart looks okay, I suppose, but it was down 0.34% today. And price is under the Kijun-sen. Chiku spin is under price. I'd stay out of that one. Bitcoin up 2.21%, but still under the cloud on the daily. I'd hold off on that one too. Gold had a little pop up today, up 0.4%. Yesterday, it actually bounced off of the cloud. So price gapped down, came down, tested Kijun-sen. And like I've said, these are really strong levels of support. We can expect to see that especially if a bullish candle like that forms after it reaches a level of resistance, support, expected to price to bounce. Now, it too came up and then kind of stalled. So here's a 5-minute chart with gold. So it moves up to this level and then dropped on the 5-minute. So it doesn't look like it's rallying here by any means yet. What about real estate? That's kind of sideways, down 0.09% on the daily. On the weekly chart, okay, just kind of, again, sideways action. Silver, wow, look at this on the weekly chart, huh? We had that doji. That's also a reversal candle, guys, after a move up. Okay, when you see a candle that looks like a cross like that, it means that the opening price and closing price of the body are very close. And if you see price closing underneath it, like it looks like it's going to close, that's not a good sign. Now, we are still technically above the Tenkan-sen and the Kijun-sen and the cloud. So we shall see what happens there. But I would hold off on silver for the time being, as it seems to be stalling in this little region. The good news is it did stall for 2 days in a row, and it's bouncing a little bit today. How about XLY? Consumer discretionary, bouncing above the cloud again, but on the weekly chart, what does it look like? Okay, so it looks good on the weekly. That's consumer discretionary. Let's look at the daily again. Okay, so the only negative here is Tenkan-sen is under Kijun-sen, the 9 period. But it looks like it's going to cross above soon, hopefully. We shall see. Problem is, just recently we broke under this low. You can see that low right there was broken. So the trend has been broken. And once that happens, it takes a lot. It's like now it has to prove itself. It reached this double top area here and dropped under that low. That's concerning. It now needs to sort of get above these highs, in my opinion. I'm going to change that right now. Let's move this moving average to the top here. 243.40. That's the level that it needs to break through, in my opinion. I'm going to get rid of this one here. Okay. That's what I'd be watching. Utilities, bearish engulfing pattern. XLU on the weekly is forming. On the daily chart, you can see the multiple days here, 6 days in a row, on 5 days under the Tenkan-sen, but we had that bearish engulfing pattern right there too. Okay, that's the opposite of the thing I mentioned earlier. If you look under bearish double candle patterns, it's right there. Okay. XLP, under the cloud, no on that one. Financials, under the cloud, no on that one. XLE, the energy stock, Tenkan-sen is under Kijun-sen, no. Chico-span is also underpriced on energy. XHB is under the cloud, so no on home builders. XLB is materials ETF. It's been showing a little bit of strength here, but it's still under the cloud. Okay. Now you still might find really strong stocks within this ETF. Remember, this is a basket. ETFs are just a basket of stocks that you can trade like a stock throughout the day. We are now going to take a look at some of the stocks that were requested by our members. There's a list of 8 stocks, and we're going to run through these very quickly. HIMS. Let's look at this one. Start off with the weekly chart. So obviously for the last 2 weeks now, we are currently under Tenkan-sen. When you see a price that is not showing all the signals bullish on the cloud, remember, you don't want to be adding positions in this scenario, but you certainly can manage your position. All right, so that's a different thing. Right now, it's still above the cloud. On the daily chart, it's currently under the cloud, but it's finding support. It's finding support at the 200-day, that dotted yellow line. So it found it right here, and it's finding it right here, right now. And then today it was up 2.17%. So I would try to give this an opportunity to potentially bounce, re-enter the cloud, and continue moving up if you happen to be holding a position in it. But I wouldn't be adding here, right? If you happen to have a position, that's how I would play it. I would hold off and just wait to see what happens. Right now, there seems to be a little bit of hope that this thing could potentially bounce. What about Lyft, LYFT? This one has pulled back. It's currently, let me start with a weekly chart. This one looks good on the weekly, actually, because it pulled back and now it's found support at the green line and is moving up. The cloud itself the future cloud is bullish. It's above the 200-day moving average. We've got a higher low here from the prior one. We've got a higher low here from this low. And we have a higher high from the prior high. So we're in an uptrend currently on the weekly chart. What about on the daily? On the daily chart, we've broken through this 2152 level, which was actually a monthly level. Let me look at that monthly level. Okay. So it kind of goes back all the way to this candle right here from 2022, August 31st, 2022. And notice for how many months has Lyft just been stuck in a rut, basically. Look at that. Multiple months, multiple years under the cloud. Just bearish right now. Here it is in the weekly, though, and it finally has emerged through. And so there's some signs of hope. But that 200-day is still declining. It hasn't even started to flatten out yet. Here it is on the daily chart. Look at the profit margins, too, just 1.51%. But it is an $8.5 billion capitalization. Right now we have that bearish crossover. I would not be adding positions here. You can certainly manage this one. You could use a 2-hour time frame. You can see it's inside the cloud. We've got a series here of higher lows on the 2-hour. We get the 1 hour where it's above the cloud. All right, so you've got options here on how to trade this. On the daily, it does look like it's, looks like it's trying to build a second leg up from this area, from this low of 1907 or so. We shall see what happens. How about SLVR? The physical silver ETF has, showed some weakness here once it broke through the Tengen-sen. We had that bearish pattern there, and then it dropped some more. Today it was up 1.71%, but stalling at the Kijun-sen. That's the daily chart. Here's the weekly. Stalling at the Tengen-sen. So it looks like here's the good news. On the weekly chart, do you see that wick? It broke through the Tengen-sen and then started to get bought up yesterday. Basically, that's what led it to get above the Tengen-sen once again. So that's good. But the bottom line is that there's been a break in this nice, strong uptrend. And so there's weakness here now. There is weakness, okay? Let me just draw something real quick for you. You can see from that low to that low, yeah. Right? Like that. It seems to be holding up above that trend line. Interesting. So you can see, let me get that low right there. Okay, so it's around that level. Moving up. If we draw it, goes right to this low here. Let me make that bigger so you can see what I'm talking about. So here are the lows where the price touched that trend line, touches again right there. Right there. Okay. This is kind of concerning to me. Do you see what maybe you guys are also seeing what I'm seeing here? Whoops. Let me go back. Sorry. Let me make this bigger. If you look where price touched the low there, price closed under that trend line on Tuesday, October 21st. Okay. Moved up, stalled there, and now it's still under that trend line. That's concerning. I'd be watching this very closely, basically. All right. But it does show some signs of strength here in the weekly as far as holding up above that green line. All right. So that's the key thing. But yeah, just watch this one. Here's a 2-hour time frame on silver. You can see that multiple weeks where we were above the cloud and we're finally under the cloud on the 2-hour time frame. It's broken down. And look at these last 4 candles on the 2-hour chart. They're all negative. So it's kind of looking like it's leaning like it's going to drop some more, potentially. We shall see. SOXS is a direction daily semiconductor bear 3-time inverse ETF. So if you feel like the semiconductor stocks are all going to drop and they're going to fall, this is something where you would benefit if you purchase this ETF because it does the inverse, right, of the semiconductor stocks. And so, but today the semiconductors were up, right, as I mentioned earlier. And this particular ETF was down 7.14%. It does have a lot of volume. Look at that, 44.6 million shares traded today. And right now, if you look at this on the weekly chart, whoops, the weekly chart is under the cloud. It's under the Tengen-sen on the daily chart also. Okay, so this is not a time to be adding SOXS in my opinion. I think the semiconductors look pretty strong overall. That's the daily chart. Here's a 4-hour chart. That also doesn't look bullish here, obviously. So I would stay out of this one. But if you see a huge decline in the semiconductor space and this thing starts to turn bullish, it could protect, or if you have a number of semiconductor stocks, and this is one way that you can hedge your account. And that's one of the things I kind of talk about a little bit in those member-only videos. All right, TTD, the trade desk. That's a 4-hour. So let's look at this on the weekly first. It's currently under the cloud. It looks like it's found some support, maybe potentially made a bottom right there. It's a double bottom that's kind of forming slowly. Price did get for the last 3 days above the Tenkan-sen, but we're still under the cloud. I would not be adding positions, but I would be managing this. And right now, I wouldn't be getting out. If I had a position hypothetically in this trade, I would be holding it and waiting to see if it can continue moving up. Now, if it breaks under this low here, you're in trouble. So just watch that level. Let's see, what is that price? It's around 43.77 or so. Okay. That's the weekly chart. Here's the daily chart. Re-entering the cloud, showing a little bit of bullishness. A higher low was created right there. You know what it kind of looks like a little bit to me is a inverse head and shoulders pattern. So here's the head, shoulder, and shoulder. And if it breaks above that trend line right there, this thing could take off. So just watch it. This is a bullish pattern that we're looking at here. It looks a little bit like this, guys. Let me show you it right here. Right there, inverse head and shoulders, okay? The shoulder, the head that's lower than the prior low. Then we've got the higher low here from the head. And then we get the neckline. And if price gets above it, that's very bullish. So that's exactly what I'm seeing here. It's kind of interesting, like after a while of what, if I've been studying charts as much as I have, for decades now, it just pops in my, I can just see it. It's kind of like, ever seen like one of those posters where, if you got to stare at it, look at it a certain way, or stare at it for a little while, and then it reveals itself. That's kind of what charts are like. When after a little time of studying the charts, you start to like see stuff, and that's what I'm seeing here with TTD. All right, TWLO on the weekly first, above the cloud for a week now, looks like, but it's under the Kijun-sen, Twilio. And the cloud looks like it's starting to become a little more bullish. It looks like it wants to cross over here. We've got a lower high than the prior high. We've got a higher low. So it's kind of like a symmetrical triangle that's formed here on the weekly chart. If you look at these highs here, whoops. Let me fix that. Whoops, sorry. Give me a second. There we go. That's what I'm seeing there with Twilio. It's a symmetrical triangle. So as it squeezes and continues to move in, right, it's just kind of like consolidating more and more. It's like a coil that it gets tighter and tighter. And then when it finally breaks above either the upper trend line, then you'll see it probably pop to the upside. If it breaks under the low here, it will probably drop to the bottom. Below it, and it will get under the cloud, of course, and it will be trouble for Twilio. And remember, the next earnings coming up on October 30th at the end of this month. So I think that's going to be the determining factor. Like right now, nobody knows where this thing is going. It's just kind of going sideways at this point on the weekly and on the daily charts inside the cloud. That's another indicator. When price is inside the cloud, that means that there's indecision. And you can see the crisscrossing here of the cloud itself, where single span A crossed above the single span B, then it crossed under. Now it's crossing back above it on the daily chart. So it's just a mess right now. It's just kind of going sideways, okay? Here's Uber. There's no clear direction, basically. And that's another cool thing about the Ichimoku cloud. It will tell you when things are going sideways, and that can also keep you out of the market. Uber is under the Kijun-sen, but popping above the cloud. Nothing to do here with that one. On the daily, here it is on the weekly chart under the Tenkan-sen. So yeah, it's just I would hold off on that one. WPM is wheat and precious metals. Now that one this week dropped, and it looks like it's going to close under the 9 period. The good news is that it did find support at the Kijun-sen, the red line, and it started to bounce. Here's the daily chart. You can see it re-entering the cloud. So it's got some signs of hope. It was up 1.13% today. We'll see what it looks like tomorrow. Will it continue moving up? Will it come to the top of the cloud and test that? The top of the cloud is just 4.2% away. If it gets back under the cloud and drops under the low here, under the $94 level, then you're in trouble, I think. That's the thing I'd be watching closely. Guys, that's going to do it for this video. Thank you for watching. Don't forget to hit the like, subscribe button. If you know someone else that might be interested in this video, hit the share button. There's a share button where you can share this video. And that's one of the best ways to get the word out. But yeah, let's reach 24,000 subscribers. And thanks again for watching. I will catch you all in the next one.